this great event. And I think if there has been a criticism of Bitcoin, it has been the consumption of the energy and the energy it takes to mine the Bitcoin.
Yeah.
How did you sort of see that as a problem, and are there actual steps to fix it?
Yeah, absolutely. So, we were founded by Silvio Macaulay, who is a Turing Award-winning cryptographer and based in MIT, actually. So here in Boston, tenure professor at MIT. And he actually invented a couple of the things that cryptocurrency more broadly as an ecosystem uses: zero-knowledge proofs, verified random functions, that kind of thing. And so he watched the ecosystem develop, and he realized some of these earlier protocols, like Bitcoin, they weren't exactly, they're not fast enough exactly, and they have a large carbon footprint.
Okay.
And they don't scale exactly. So he came up with another consensus mechanism. In blockchain, the whole juice is in the consensus mechanism. So if you want to have a lighter environmental footprint, you need to have a different kind of consensus mechanism.
Okay.
So he came up with a proof of stake consensus mechanism, which has a very light footprint, like 7 houses or something.
How do you need that to take off, to be adopted, in order for this sort of narrative to really catch on and become, pun intended, sustainable going forward?
Yeah, no, 100%, because it gets so technical so quickly. Yeah. And like things that are new, you don't tend to differentiate among them in the beginning. We think that truth will kind of shake out over time as people get a little bit more aware of the differences and the nuances between the different kinds of layer 1 chains. And also, we believe that in this world, we need all kinds of different blockchain protocols. So we don't think it's a winner-take-all world at all. But we are very proud of a couple of things about us. So we are a very scalable blockchain. We do 10,000 transactions per second in July. We have final settlement in 4.5 seconds.
Yeah.
We have a very low carbon footprint and a decentralized blockchain. So, we think we are sort of generation 3 of blockchains, and we're well positioned going forward. Yeah.
We have to talk about, well, maybe generation 1, and that's been all of the volatility around crypto and the volatility around Ethereum, and don't even get me started on Terra Luna.
Yeah.
And do you watch all the volatility in those sort of secondary crypto markets? Does it impact your world? What do you make of that?
Yeah, well, sadly for me, anyway, this is not my first bear market by any means. And I was at the NASDAQ during the dot-com crash. I was at JP Morgan during the global financial crisis. We've had in the cryptocurrency ecosystem a number of different events, right? In 2014, we had Mt. Gox. That was about $500 million. We had the DAO attack, or attempted attack, in 2016. We had the ICO bust, almost $1 billion went up in kind of coins there. And so the crypto industry continues to recover, and it continues to make itself better because of what it goes through. My heart absolutely goes out to those investors in Terra Luna. I mean, and I have seen a lot in my day, but 56 billion 56 billion is a lot of money for one asset to lose in one asset alone, right? So it's unique for sure.
Well, and that sort of brings up the idea of regulation. And you want regulation to help protect, but you don't want regulation to stifle all of the innovation. And the great experiment that was, and maybe it failed for now, but it was the experiment and the chance at it. How do you stand? Where do you stand on regulation?
Yeah, I mean, I think it's a very nuanced, subject, obviously. And what the industry really does need is regulatory clarity. And I think that when Bitcoin, for example, or Ethereum or Algorand, we don't make promises to investors of any kind ever, right? But when you say something and you call it a stable coin, you're kind of saying that you're going to be able to get $1 if you turn in that coin. You're making a statement, and I think that's where regulators have been focused and are going to continue to focus. And they're going to define, I think, stable coins in a very clear way. And if you don't meet those kinds of specifications, you're probably not going to be able to call yourself one. The most important thing I want to say, though, is that the Algorand blockchain has nothing to do with algorithmic stablecoins.
Okay, right. So good to make clear on that.
Yeah.
On that note, though, when you think about stablecoins, I think you're right. When you hear the word stablecoin, you think stable. Was the bigger issue with Terra Luna that it was backed by an algorithm? It wasn't backed by a dollar peg, or even to a blockchain, or even to a real asset. For a stable coin to work, do you need the collateral, if you will, to be actual stable?
Well, what I will tell you is that it was kind of a perpetual motion machine. And perpetual motion machines, I mean, we have been trying to create a perpetual motion machine for centuries, and they do not work. And so it had a baked-in mechanism that if that mechanism starts to fail, then you can have a kind of a death spiral. And so there are more clever financial minds than I that may come up with some way that there is some kind of a future for algorithmic stablecoins, but I don't know. But that kind of a perpetual motion machine type play is not going to be what it looks like.